RBI's bi-monthly monetary policy decision. We are inching close to our target for inflation. However, the big headline for me is that the GDP growth for financial year 24 is now changed to 7% from 6.5% to 7%. That is, of course, as per the RBI.
Right, the right green arrows and the right red arrows, isn't it? We want inflation to keep going down. We want GDP to keep going up. The macro economic indicators are absolutely fine. It is for the fifth time, bear in mind, in the last 10 months that we've seen the policy rate being held. February 2023 was when the rate was up from 6.25% to 6.5%. It's the fifth time that the rates have been held, and that's an important indicator. There's a message being sent out by India's RBI governors that policy makers should not be swayed by data on a monthly basis. They should wait for data to settle down. An important message. That's what India is doing. India is sending out a message by neither cutting down rates nor hiking interest rates. It's all about keeping it and holding it and waiting for macroeconomic indicators to be strong enough. And he said, despite the fact that India has got inflation finally within the target range, and if any worries about a less than 7% GDP being erased, time would have been ripe for India to cut interest rates. What is the issue over here? But we've held interest rates, and we're sending a message out to policymakers across the world through our RBI governor about how to react to macroeconomic data arriving at this time. He uses words like the way forward could be fickle, the future could be fickle, so you need to be very steady in your policy and decision making. So that's reflected in the fact that it's for the fifth time the rates have been held this year.
And withdrawal of accommodation there. What's also interesting is that the CPI inflation, the target is still 5.4%. So the governor not very happy with the way inflation is inching. He also hinted at the fact that food inflation could perhaps be a dampener going forward. It has been a dampener in the past couple of months. Food inflation has remained double-digit despite government efforts month on month.
And also the problem with the food inflation, one is internal supply chain concerns, and the second is the fact that the erratic rainfall that affects different parts of India differently. Somewhere there's deficient rainfall, somewhere there's excess rainfall, because of which crops get damaged, crops don't get enough water. So all of this, poses a problem for food prices to come down. I mean, the hope is that the monsoons from here on sort of average out, and you get a crop that meets expectations of the market. So the problem with food inflation to me at this stage is the weather vagaries, and of course the challenges that we deal with as far as our internal supply chain within the country is concerned. Yes, but the fact of the matter is that it's not like all the concerns have gone away. That's precisely the reason that the rates have not been cut down. The rates have been held, which is basically RBI saying the best thing to do would be now is to wait and watch.
Absolutely. And as far as CPI inflation is concerned, forecast for October to December is retained for this year, retained at 5.6%. Forecast for January to March is also retained at 5.2%. Overall forecast for the year retained at 5.4%. For growth, there's been a revision solely on the back of the fact that Q2 of financial year 24 has been extremely well. The results have been very well. Results have basically been better than expectations at 7.6%, and that has resulted in the GDP growth forecast changing for the overall year. Also for October to December, it stands revised at 6.5% from 6%. For January to March at 6% overall for the year, as opposed to 6.5%. The country is expected to grow at 7%. So good news coming in, by the way, of RBI governor's statement on the back of the bi-monthly monetary policy. Remember, the rates are unchanged for the fifth consecutive time. There is a pause button. Hopefully, a rate cut perhaps sometimes next year. That is the big expectation.
Well, the way Shaktikant Das, our RBI governor, is speaking is unlike, say, even the feelers.
Quoting Gandhi.
Mainly in say comparison to the US central bank, which is the US Fed, where we've been hearing about a possible rate cut by FY24, a possible rate cut coming up soon. That's not the signal he's sending. The signal he's sending is that if there's a rate cut, we'll let you know. As of this monetary policy review is concerned, we are not cutting rates. So it's as he said, the future is fickle. There's no it's very difficult to peer into when is the possibility that the RBI will go ahead and cut interest rates. But what is important to note here is that as macroeconomic indicators improve, India has held its interest rates. India is in fact sending a signal to all central banks across the world about what is the right way to react to macroeconomically. Just because we got 7.6% in the last quarter.
Take a long-term approach as opposed to taking a tunnel vision of the data that is coming in.
Not a knee-jerk approach to macroeconomic data, so to speak. Look at the macroeconomic data, be happy about it, but really wait for it to settle down.
And before we move forward, let's also quickly take a look at how the markets are reacting to the latest updates that have come in by the way of MPC. In markets, of course, bulls are running amok. Nifty touched 21,000. It's at 20,985 at the moment. Sensex at 69,792 at the moment. So markets are in the green. They've taken positively to the news after snapping their 7 days winning session yesterday. Markets reacting positively to the RBI's MPC takeaways.